everybody. I am Dr. Julius Oni. I'm the CEO at XSITE Capital, and super excited to welcome you today to the exciting world of multifamily meetup. We do this meetup every first Monday of the month without fail, and we invite different speakers from the field of real estate, from the field of personal development, or even the field of general investing, just to kind of, enrich our minds and expand our mindsets when it comes to growing our wealth and growing our minds. So today I'm very honored to be the one presenting to you all. Co-hosting with me today, though, is the entire XSITE Capital team, led by the co-founders, Mr. Leslie Awesome and Mr. Tenny Tolofari. We are super excited to be here and look forward to bringing as much value to you as possible today. So today I will be talking to you about the power of passive income. And the subtitle is why healthcare professionals are turning to real estate as their source of passive income. So I do have a disclaimer before we get started. This is our legalese. The only thing I'm credentialed to do is to replace people's hips and knees. Otherwise, please feel free to double check everything that I share with you today. This is meant to be for educational purposes. Feel free to double check it with your, with ChatGPT, your financial professionals, whatever your source of financial education is. That's completely fine. So, why am I qualified to give this talk and talk about passive income in real estate? It's I'm fortunate to be a doctor, and I very, very much love my work as an orthopedic surgeon, replacing people's hips and knees in Baltimore, Maryland. I truly am passionate about the work and don't anticipate stopping it anytime soon. And I'm sure many of you healthcare professionals also feel the same passion about the work that you do. I also have been fortunate to also invest in as an angel investor in multiple startups. But I can tell you that one of the most exciting investments that I have participated in so far has been my foray into multifamily real estate. It's expanded my horizons the most. It's gotten me the passive income that I needed the quickest. And I hope today that I'm able to share with you how multifamily real estate can also start to become that beacon and that source of passive income for you also as a busy healthcare professional. We started XSITE Capital with my partners, as I introduced them earlier. And in the last 3 years, I've been able to accumulate $168 million worth of real estate. And we were only able to do that because other healthcare professionals like us, other investors like us believed in us and came together and decided to go out and take, our fate by our hands and essentially deliver for ourselves and for our investors and our families. As healthcare professionals, we are highly paid, but we are also highly taxed. We also tend to trade our house for dollars because we are actively exchanging our energy, our time, for the income that we do get. So, and as far as there's only 24 hours in the day, if all you have is your earned income, your W-2 income, your 1099 income, and even if you're self-employed, your income from your self-employment, from your business, if you continue to have to trade your hours for dollars, to continue to work actively in that business, at that job as an employee, there's always going to be a limitation to your income because there's a limit to the number of hours in the day. Also, a lot of healthcare professionals have high student loan burden. So that already takes a big toll on us, especially for doctors. I mean, you've invested hundreds of thousands in your education from undergrad to medical school, and also had to delay some gratification while you were training through residency. And now finally you're making some income. You're not only getting significantly taxed, but you're also having to pay a significant portion of that to pay back all the loans that you've taken. Also, at this point, with a lot of doctors or a lot of medical professionals experiencing this much delayed gratification, it's so easy for them to be susceptible to what we call lifestyle creep. The easy way to understand it is this is keeping up with the Joneses. You know, you're now a doctor, you're now a CRNA or certified registered nursing anesthetist. You are now a pharmacist, you're a dentist now. So it's time to go get that nice big car, to get that big house, to take multiple vacations in a year. Everybody wants to wear the latest fashion, the designer stuff, and look like the part. And this lifestyle creep is one of the biggest eroder of wealth for a lot of upstarts and a lot of medical professionals. So the fact is, to really truly be financially free and to truly achieve financial independence, you're going to need to start to earn money outside of your work. And the way to do that is to start investing your money. Because if you, just like I said earlier, you're a highly paid skilled worker, you cannot pass that highly paid skilled work down to your progenies, to your kids, even if you wanted to. You don't know even if your kids are going to want to become a doctor or become a nurse and anesthetist or become a pharmacist or become whatever type of healthcare professional that you are. So you have to kind of start figuring out what tangible things you're going to be able to pass down to them, right? That's what we call legacy wealth. That's what we call generational wealth. The only way to create that is to start to put some of that earned income aside for investing so that your money could be working for you as you continue to work for you. And if you think you're going to be able to save your way to wealth, you are absolutely wrong. Because obviously, just with inflation alone, if you're just saving your money, for example, in a savings account with the banks, they're going to love you. They're going to give you a nice little label, the private banking client. Every time you walk into the bank, they will probably, give you top, great service. But that's because the banks are smart. They're going to take your money and they're going to put that money to work for you. Oh, well, not really for you, for themselves, because when they put that money to work, they're going to get anything between 7 to 30% average annual return on that money. But if you are nice to them, they will maybe give you 1% of it. In most savings account, it's actually 0.09%. I always wonder why they just don't call it 1%. But I guess they still want you to work hard for that 0.01%, So, but the fact is, you cannot save your way to wealth. If you saving, it's great, especially if it's for your emergency funds. If you saving, it is great, especially if you're saving for a particular goal to either invest or achieve something. But just to park money in the savings account and just watch it accumulate, it's usually not the most it's usually not the best way to achieve long-term wealth or generational wealth. And for a lot of people listening to me right now, a lot of people are like, listen, I do, invest in stocks and I do some single family. I own my own property. I've almost paid it down. That is usually the classic way that we've all kind of learned to try to accumulate wealth over time. And you hope and pray that your property appreciates over time with organic appreciation, it's actually not a liability. It's more of an asset. And stocks, they yo-yo up and down. Sometimes they're going up, sometimes they're coming down. But even worse for some people, they outsource their stocks to financial advisors. They're like, you know what? We have all been trained to just outsource everything to someone else. Just manage my funds for me. And yes, those financial advisors will sell you insurance. They'll sell you, disability insurance, life insurance. Not to say those things are not good, but they're making commission off of those things. And then the vast majority of them would just mainly invest for you in the stock market. And as we all know, with what the stock market is doing right now, that is a very unsure proposition for the most part. And even if it's a guaranteed proposition, there's still other ways to diversify and start to grow your wealth outside of the stock market. And for some of the more savvy investors in the audience, they may say, yes, I have some single family rentals. Fantastic. Some they do flips. They actively actually go buy properties, very cheaply, renovate it completely, and then sell it in less than a year for profit. It's pretty time and energy intensive, but it's certainly an option. The Burr method is another one that some people do, and that is to buy, rehab, refinance. Rent and then refinance, pull some money out, and then do it all over again. And that way, you could kind of create a portfolio of properties that you're renting out. It takes significant amount of time. Once again, it takes significant amount of energy, and then you still continue to actively participate as a landlord, or at some point outsource it to a property manager. Some people have short-term rentals. That's another one that some people do with Airbnbs, and it's a great way to invest in real estate. Certainly nothing against those things. But once again, it requires some active participation. Small multifamilies, anything 4 units or less. Also good options of investing if you want to actively participate in real estate. But all of this traditional real estate investment, sorry about that. Can you guys see my presentation?
Yes, sir. We see it.
Okay, fantastic. Let me just try to get back to where we were. Fantastic. Okay, so yeah, so so the question is, what are savvy investors doing? Are they doing all of these things? Probably not, because savvy investors are diversifying their income. Yes, they may make some of the initial capital doing some of this in real estate. They may make some of the initial capital in crypto. They may make some of the initial capital in the stock market. But ultimately, you have to kind of listen to, master investors like Ray Dalio, who says the only holy grail of investing is to have 10 to 15 uncorrelated investments. And with that, you can reduce your risk by about 80% without decreasing your return. And with that, if you're able to reduce your risk by 80%, you increase your return to risk ratio by a factor of 5. And what all of that means, if that sounds like jargon to you, is that you need to be diversified outside of the stock market, so that you are not suffering every time the stock market goes down. Yes, when the stock market goes significantly up, yes, maybe you get to celebrate then. But when you have uncorrelated investments that are completely detached away from the stock market, that are still making money for you, when you're not actively working there, those are the types of investments that you want to kind of pay significant attention to and really put a lot of energy to get in. So this is just a chart that provides a high-level overview of our commercial real estate, which in this case, let's say commercial real estate is considered, an example is multifamily real estate, for example, like anything 5+ units is considered commercial. But we're talking about just commercial real estate. It could be anything from office buildings to self-storage to mobile parks to multifamily apartments. When you look at those commercial real estates, they do have potential for appreciation, just like stocks, and they do have significant tax benefits, unlike everything else on that list. They also hedge significantly against inflation. Real estate is one of the most inflation-resistant investments that you can have, particularly large real estate or commercial real estate. Liquidity is perhaps the only negative that this type of investment can have, because obviously it requires quite a bit of investment, and you just cannot go in randomly and say, hey, I want my money right back. You got to be willing to let that money grow and provide some passive income to you. But the beautiful thing about liquidity with this is if you do this just long enough, you are able to actually get just enough cash flow when you need it to do all the things that you need to do, to cover your expenses when you need to. And the beautiful thing about this particularly is it does not correlate to the stock market. It's a beautiful thing, right? Stocks, yes, they can appreciate. Excuse me. Yeah, stocks can appreciate, but definitely there's no significant tax benefits, and it's definitely not going to hedge you against inflation. It's definitely liquid. That's a fantastic thing, and I mean it's the stock market, right? Bonds, definitely. I mean the appreciation is very slow. It's barely better than your savings account. No tax benefits. Once again, it does not hedge against inflation, but once again, it's a nice liquid investment. And crypto, yes, it is. It's got potential for appreciation, but it's also got just as an aggressive potential for depreciation. As you well know, that's one of the most volatile investments that you can have. Not to say you shouldn't have it. 5% of my portfolio is in crypto, but that's just because I don't want to feel FOMO when if it goes up, but that's a percentage of my portfolio that I'm willing to let go if nothing works. Tax benefits, obviously not. Edges against inflation, no. And liquidity with cryptocurrency, you do have that for sure, because you could just sell your cryptocurrency and it does correlate with the stock market. And savings account is perhaps, just for the same reasons that I gave earlier, is perhaps one of the worst investment vehicle you could have. There are reasons why you would want a savings account, why you would want to save your money, either as for your emergency funds or for other things, but certainly for your main long-term investment goal, that's not the ideal vehicle for that. So what is passive investing? This is an opportunity or an investment that yields positive returns without you having to do any additional work. So this is the type of investing that once you've done it, you may have to do some due diligence up front, but once you've done it, you don't have to do work. You just wait for the money to come. That is what we are talking about. And when your passive income exceeds your lifestyle expenses, then you are technically financially independent. That should be the goal of every healthcare professional. Because once you've achieved that, when your passive income, the income that is coming in when you are not, when you're eating, when you're drinking, when you're brushing your teeth, when you're going on vacation, that income that's coming in, regardless of your active participation in any type of work, when that income exceeds all the money that you need on a monthly basis to take care of all of your needs, that is when you are truly, truly financially independent. And one of the greatest ways that we've discovered to create this passive income is in multifamily real estate. And what is multifamily? When I say multifamily, multifamily is defined technically as 5+ units of apartments, or 5+ units of real estate. Anything 4 units or less, that's considered still small multifamily, but commercial multifamily is 5+ units. And at XSITE Capital, for example, we are talking about large multifamily, things like 100+ units of property. Yeah, my computer is a little spastic at this point, so please give me a second to. There we go. So why multifamily real estate? Why are we excited about it? Why did I, after discovering about multifamily real estate, decided to partner with other like-minded individuals to essentially go out on the mountaintop and proclaim the gospel of multifamily to as many people as care to listen to us? That is because we discovered that this could potentially be an answer for like busy professionals. We went to like different conferences. We were engaging with people investing in multifamily real estate, and we realized that, oh wow, we didn't see that many healthcare professionals here. We didn't see minority folks investing in this. So we saw an opportunity to, you know what, proclaim the gospel of multifamily to these folks that weren't participating in it, because we saw the potential for exceptional returns in this particular asset class that was just beyond what we've seen with anything else. So, and the beauty of this is, if once, as a busy professional, we know you love what you do. We know you may not want to actively participate like we decided to do, but as far as you still able to participate by putting in your equity and still taking advantage of the tax benefits just through that participation, that is, we thought that was a great news that we needed to share with people in our communities. And I mean, with our investors, for example, they get quarterly cash flow. In some cases, they get monthly cash flow. But once you invest your into this multifamily real estate as a passive investor, you could get, as part of the investment, as the tenants pay their rent, you get a portion of that as cash flow. This is also recession resistant, because as I will show to you later in this talk, as the recession set in and the inflation kind of came on, we were still able to make profits on some of these deals that we were buying. And multifamily real estate is also what the banks, the insurances, the pension plans, the family offices, Wall Street, everybody is investing in multifamily real estate because they know it to yield below average risk and above average returns. And the cost segregation and bonus depreciation is a topic that we can actually have a completely different and entire talk about, because the tax benefits of investing in multifamily real estate, it's just immense. I mean, with cost segregation, for example, when we buy properties, we invite cost segregation experts. They depreciate everything besides the land and building. And we are then able to accelerate that depreciation and divide it amongst everybody that participated in buying that particular property. And those people can then take that depreciation and use it to offset any other passive income that they do have from other sources. It's powerful. You're just trying to get. So additional benefits of multifamily real estate, it's scalable. I mean, an investor could, excuse me, this computer is really doing there we go. It's scalable, and it's, I mean, because you as the passive investor, you can invest as many deals as you want. You could pull 50K in this deal, 50K in that deal, 50K, and you don't have to do that much more work. You don't have to the only work you probably have to do is just do your due diligence at the beginning of the deal. Make sure you're working with trusted operators that you can trust to actually implement the business plan that they are presenting to you, and know that this is a deal that kind of works for your portfolio. The volatility associated with real estate is nothing compared to the stock market. You get to leverage other people's expertise, you leverage their time, you leverage their resources, and you still benefit from all of the benefits of investing in real estate, like the tax benefits and the cash flow. And the other thing is you could actually walk through these assets. You could see, you could touch them, you could, so this is a tangible asset. It's not just something that computers are coming up with in some place around the world. This is something you could actually touch. So yeah, so you could truly remain yourself while pursuing your passions, whatever it is. It could be in healthcare, it could be outside of healthcare, but whatever those passions are, you could continue to do those by still investing in multifamily real estate. So the way we have chosen to do this, and the way that you can also invest in multifamily real estate, is really called syndication, multifamily syndication. This is where a group of like-minded people come together. We pool our resources and we go ahead and buy an apartment building. And have you ever thought about it? Like we've all lived in apartments as we grew up, as we moved through life, as we, went to school and went through residency or through training of whatever kind it was. And have you ever thought that somebody was the one who owned that apartment? Yes. And every time, just think about it. Every time you're driving from home to work, or from work to home, or to school, or to church, you see apartment complexes left and right, left and right. People actually own these properties. And what I'm trying to tell you now today is you too can start honing these properties. And yes, you may not have the $10 million to go buy a 150 unit apartment or 80 unit apartment. But what we can do is put our $50,000, $100,000, $500,000 all together. And since we now have the technical know-how to do it, we can go ahead and purchase those properties. So the process is usually to acquire the property. So usually we identify the property. Okay, this is a property that we think we can grow significant wealth in. And then we create a business plan for it. We take it to our community of investors. Hey, listen, we have this property. Who wants to invest? We create an LLC that owns that property. And anyone that wants can then buy a portion of that LLC. So we literally create a property ownership group. And that's what it works. The folks that bring money into the deal, they get to enjoy the returns when the returns come, in addition to the folks that are actively working to implement the business plan. And typically, we either sell in the deal at the end of a set time. It could be anything from 3 to 10 years, or we could decide to hold the deal, in which case we would refinance it, return some of the capital back to the investors, and then continue to make some cash flow on the property, both us and the investors. So the general partners, or sometimes we will use the word interchangeably, or the active partners, are the ones who are responsible for the day-to-day operations. They find the property, they underwrite the property, they secure the financing from either a private lender or public lender like Fannie Mae and Freddie Mac. And then we go to the passive investors and raise the capital and then implement the business plan over time. The limited partners are the folks who invest in the deal. They obtain their share of profits, they obtain their cash flow, but they do not have to actively participate in the deal. The vast majority of these limited partners are accredited investors. This is defined by the SEC as anyone with an individual income of over $200,000, or a joint income with their spouse of over $300,000, or anyone or a joint spouse group that have a net worth that exceeds $1 million. So if you check off this boxes, then you're an accredited investor. If you do not, still no worries. There are some deals also in this space where what we call sophisticated investors. These are non-accredited investors, but people who have the money to invest can still invest in some of these deals. The vast majority of our deals at XSITE Capital so far have been mainly for accredited investors, but certainly in the near future, we are thinking about actually bringing some deals to the market where we are able to accommodate some sophisticated investors that do not meet the definition of an accredited investor. So what do we look for in assets and markets? Because this is one of the questions that people ask me all the time. Like, what is it that, I mean, how do you even know where to invest? How do you know what property is going to do well? Well, all of this is data driven. We look for markets with stable industry. You want markets with a lot of different employers, because you don't want a market that's just dependent on one employer. Because what happens if that employer go bust? Then you are in trouble, because that's most of the people living there are probably working for that employer. You want communities that have airports. We like state capitals. We have some investments in Columbia, South Carolina. That's a state capital. We typically like the Southeast US because there's significant migration to the Southeast US from the Northeast, from the West Coast, from the Northern US. So there's a lot of migration to that part. So we love population growth. We like when the population is growing. We like when the rent is growing. We like when the diversity, where there's a diversity of employers. We like when there's like a large population that could support the business plan. And so this is just an example on the right where we have Charlotte, which is projected to continue to grow over the next several years. And with the rent projected to continue growing over time. And also it's got an area, the metro statistical area of Charlotte has over 1 million people, and as a major airport, and it's the largest metro area between Atlanta and Washington, D.C. There are smaller markets that we've also looked at that we continue to invest in. We've invested in Atlanta, we've invested in Washington, D.C., but typically it's usually the Southeast markets are like our main markets. just to kind of, for those that are new to this, let me just kind of tell you a little bit about the classification of assets. So there's Class A assets, which are like the luxury buildings. You guys are familiar with those. There's very little, deferred maintenance. It's affluent tenants. There's usually low cash flow with these properties. And the cap rates, which is a measure of how much a property is worth, are usually pretty low, meaning when the cap rates are low, these are very expensive properties, and buyers are typically institutional investors, even though we also have bought some Class A properties in the past. The cash flow is very sensitive to the market because obviously when the economy is not doing well, people start moving from Class A properties to Class B properties sometimes. And Class B properties are like the ones in the middle. They have some deferred maintenance. They have decent amenities. They a little older than the Class A properties that are like a little newer. But they have moderate cash flow. They have a combination of institutional private investors buying them. And Class C properties are a little older. They need quite a bit of value add. They need to be, they usually have not been renovated for a long time. So this an opportunity to come in, do quite a bit of renovations and updating, and get them to a level where they can start to generate higher cash flow. This some of the higher cash flow deals, and we have certainly invested significantly in this class too. So we've invested across all of these classes over time. And this is, I just wanted to kind of share that with you, just so that you can understand the types of properties that we are talking about. And I wanted to also highlight something called forced appreciation. Forced appreciation is when you actually can do something to a property that increases the value of the property. So when you have a single family home, for example, the way that you value that property is you go in the neighborhood and say, oh wait, what did everything else similar to this property sell for in the neighborhood? And if those properties sold for a certain amount, typically you listing your property for something between an average of that, or maybe around the range that those properties sold for. That's how you determine the valuation of a single family home or small multifamily. But with these large properties, the value of the property is all dependent on the amount of revenue you're able to generate from the property, meaning the value of the property is directly proportional to the net operating income coming from the property. And one of the ways that you calculate the net operating income is to divide to calculate the value of the property is to divide the net operating income by the cap rate of the property, or the cap rate of the market. So in this like 5% cap rate market, the value of any building in that market will be by dividing the net operating income, which is dividing the revenues generated by the expenses in that particular building. That's what the net operating income is. You divide that by 5% in this particular market, and that gives you the value of the building. And no one argues with you. If you want to increase the value of that particular property, let's assume it's a property that needs quite a bit of renovation. And because of that, the rents are relatively currently low because obviously it's a little run down, and it needs a little facelift. You go in, you buy the 132 units, you renovate it. And by renovating it, you're able to now bring in tenants that are able to appreciate the value in the beautiful apartment, in the beautiful clubhouse, in the beautiful gym house, in the beautiful updates that you've made onto the exterior and the interior of the property. they're now willing to pay a little. And some of the current tenants too may say, you know what, you've done well. We're willing to pay $150 extra per month for all of these things that you invested money to do in this apartment complex. By just increasing that rent by $150 $150 only per unit, you've increased the value of this particular property by $4.75 million. It's unbelievable. So marginal increases in revenue, and sometimes it doesn't have to come from rent per se. It could come from installing, a laundromat on the property where people are now, generating some. It could come from renting the roof of the building to like a telecommunications company for a certain amount. And those are ways of increasing the revenue on the property. When you're able to do that, you could exponentially increase the value of these properties. And I'm not just saying that this is possible. I am saying that we have done it. Let's give you an example of the view. A property that we bought for $12.5 million, that's $95,000 per door in Columbia, South Carolina, 132 unit. We were able to raise about $5.3 million from passive investors like you and I, all pulling our money together to buy this property. So, and we put in about $700,000 into updating this property. We renovated units. We put in a small workout studio in the clubhouse. We renovated the clubhouse. We made the pool area nice. We put in some bike racks for tenants, and we held this property for about 21 months. And in that 21 months, for everybody that invested in the property, they got an average of about 7.4% annually in cash flow. So the person that invested $100,000 got an average of $7,400 per year of holding this property. After 21 months, we were able to sell this property for $17.8 million. That was $2.25 million, almost $5.3 million in profits, just by implementing some of the same strategies that I just mentioned earlier. And for every investor that invested in that particular property, they walked away with almost 30% in average annual returns. Now you tell me, what type of tangible assets, what type of tangible assets with low risk will give you that type of return? Almost none. And it's even more important to think about what was happening in the stock market around the same time that we sold this property. So around the same time in November 2022, when we sold this property, the stock market was doing a dip. But guess what? This is a perfect example of a non-correlated investment. This property did not care that the stock market was doing its own yo-yo. We were still able to deliver for our investors. If there was an investor that had invested in the stock market in the stock market and correlated with the S&P 500 in January 2021 when we acquired this property, they would have probably ended up losing or stayed flat with their investment. But with our investors on this particular deal, they were able to come ahead and do very well from an average annual returns perspective, and essentially almost end up with like a 1.5x equity multiple on their investment. So yeah, the best time to invest in multifamily was probably between 2010 and 2021, but the next best time is now. And I'm not telling you to like just jump head first and not think about it. Feel free to educate yourself. come to meetups like this, read a little more about, multifamily real estate, read a little bit more about other types of commercial real estate. I always tell investors this, when they start asking questions and not sure if they should invest or not, I'm like, I don't care if you invest with us or not. I just want you to get started. A journey of 1,000 miles starts with the first step. So the next best time to start investing is now. You need to start thinking about ways to diversify outside of the stock market. You need to start thinking about ways to diversify outside of your active income, your W-2 job, your 1099 income, your self-employment. And you need to start partnering with other folks that have done this before so that you also can start to grow your wealth, as we have been able to demonstrate over the last 3 years. So in the last 3 years, these are the assets that XSITE has either been the lead sponsor on or been the co-sponsor on or co-general partner on. So we were able to acquire them, and this is like a total of about $168 million worth of real estate. And once again, those are the deals. This is some details of the deal. Our first one was the Griffin at Petworth. That was in Washington, D.C. We partnered with Viking Capital on that particular deal. They were the lead investors. Right after that, we were the lead investors on the View. Once again, we partnered with Viking again on Elevator Maine. And we've been the lead investors in every other deal so far. So we were the lead sponsors and the lead investors in Land Bank Lofts, Ascend at Stone Mountain, 101 Elwood, which was our most recent acquisition in Baltimore, which is a fantastic, beautiful property. If you've not seen the pictures of that property too, you need to check it out. All of these properties are doing great so far. They are providing cash flow for our investors. Now, are they providing exactly the cash flow that we projected? Guess what? Some of them are providing slightly below. Some of them are shooting way above the projected income, but we're not losing money on any of these properties. Obviously, it takes a great team to be able to achieve all of this. We have a fantastic team. And some of them you will see in the audience right now. So we are not able to do what we do without the incredible work of every single person you see on this slide. And I am super fortunate to count myself as a member of this team. If you want to get started on the journey to creating passive income, to investing in multifamily real estate, and you want to learn more, you want to, you want to have us reach out to you when we have our next opportunity to join our property ownership group, please text wealth to that number, and we'll be sure to reach out to you to get an understanding of what your current situation is, how you would like to participate, and we'll be more than happy to continue to educate you like we do on a monthly basis here, to inspire you, hopefully, to start to expand your horizon, start to think outside of your earned income, start to think outside of your W-2 income, your 1099 income, your self-employment, your single track focus currently. We want you to continue to grow your mind, and hopefully by doing so, grow your wealth like we've been able to do for our community of investors and for ourselves. So thank you so much, and I welcome any questions at this time. If you have any questions, please feel free to drop them right in the chat. And if Tenny or Leslie can just take over those questions and start asking them, I'll be more than happy to answer them.
We have a question from the amazing Gene Nicholas, someone we've known for a long time. Question is with Class B 4.5 cap versus Class C 5 cap. Are you seeing a cap squeeze in Class C, which used to be 7%?
So those are just approximate numbers. Obviously, the cap rate is still going to differ depending on the market. Just like they say, you know, real estate is hyper local, just like politics. You know, they say politics is local. You know, real estate is also super local. So some Class C property, because of maybe their vintage, maybe the type of updates that's been done to them, can potentially be sold for at a cap rate that is a little more compressed than you'd expect. And some Class B properties are selling more closer to what a Class A property would sell for. So, but that's all for sophisticated investors, particularly active investors, and that's a very smart question. The question is always like, if everything is so compressed, why not go for the higher class? Because hopefully there will be less deferred maintenance and less expenses on those properties. But the bottom line is the property itself would declare itself during your due diligence. You have to kind of, you have to take it property by property. There are some Class C properties that will go in all day, every day. And there's some Class B properties that I would run away from because the fundamentals are not sound.
Right on. Thank you, Dr. Oney. I just want to say, Leslie, Tenny, you guys are just amazing, man. I see you guys grow. Keep at it, brothers. Love you guys, man.
Thank you so much. Love you. We really appreciate you.
We're waiting on you, Gene, on the next one.
Yeah, you know me. Give me a call.
Karim asked, what resources do you recommend for education?
Great. Well, if you're particularly referring to multifamily real estate, one of my favorite starter books is Wheelbarrow Profit by Jake Stanziano and Gino Barbaro. And if somebody want to put that in the chat, that would be awesome. Also, the Bigger Pockets podcast is another great resource just to get started. I think they have a podcast called the Rookie Podcast or something like that. That's for people just starting out in real estate. But the main Bigger Pockets podcast is another one where you get to really, listen to different investors talk about their participation. There are other fantastic podcasts. There's Best Ever. There's the Dan Anford podcast, Multifamily Nation. Is that what the name is? Something along those lines. Yeah. So there, I'm an auditory type person. I listen to my books, so I love listening to podcasts, and they really helped accelerate my education in real estate. Leslie, you muted. If you
sorry about that. Bijan asked, what was the average investment for some of your recent deals?
That's a great question. The minimum investment was $50,000, but the average investment was closer to $100,000. The range of the investments typically go anything from $50,000 to $500,000. But obviously, there are more $50,000 than $500. So the average investment usually is somewhere, closer to like between $80,000 and $100,000 for the investments. Any other questions?
I'm not seeing any other questions come up yet.
Fantastic. Well,
and also you can unmute yourself and ask a question if you want to.
Or even a comment. It doesn't have to be a question. It could be a comment about your experience with real estate, your experience with multifamily real estate, or other types of investing. We all potentially could learn from you about your perspective.
That is correct, Kareem. This happens every first Monday of the month. And yes, you could join us every first Monday of the month. We try to make sure we bring some valuable content to members of our community to keep learning and growing. So I have a question. I'm going to interview Dr. Oni since you guys are not asking any questions. So, so Dr. Oni, you are I've known you personally for a while. So you by all means were a savvy investor or savvy in different investment classes. But when you came across multifamily, that was the first time hearing about it. What was it about the asset class that really triggered you not just to be a passive investor, but to become active as well?
So I think it's important to understand my background a little bit. So I started out my investment life investing mainly in single family real estate and in startups, you know. So with single family, my goal was like I was going to buy one single family home for the next 30 years and then eventually sell them all as a portfolio. But then quickly I realized that I didn't enjoy being a landlord. You know, I didn't like dealing with termites and, you know, tenants and toilets, you know, and the cash flow also coming from those single family holdings were not impressive at all. And when I tried to outsource it to a property manager, everything was so expensive. I mean, changing their doorknob was $50, changing a light was $100. It was just like, and they would actually show me a receipt, you know, showing it. And so that completely ate into my cash flow. And as a busy professional, there was no way for me to actively be picking up the phone, talking to a tenant all the time. And some of my tenants, you know, were high maintenance. So I quickly realized that single family wasn't for me. And then with my angel investment, for anyone who understands angel investment, you know that it's a high risk, high reward play, right? You invest in 100 or in 10 companies, you'll only expect 1 to 2 of them to do well. So you're willing to throw away, when you do it, you should be willing to throw away all of your money on the 8 that do not do well. But the hope is that the 1 or 2 that does well make up more than enough for the ones that don't do well. So that was a high stakes, high reward type play. And of the 50 plus companies that I ended up investing in, I would say I'm batting about 20%, which is fantastic, you know, but that was not a way, that was no way to, I couldn't depend on that cash flow because there was no guarantees that those startups were going to go from, you know, family and friends to pre-seed, to Series A, to Series B, to eventually maybe IPOing that's becoming public or getting acquired by another larger company, you know? So there was no guarantees that was, and usually that's a 5 to 10 year runway anyways. So I needed something, an investment type that was going to safely, with relatively low risk, increase my wealth, and also provide significant cash flow to me. And of all the investment types that I've ever seen, none has been able to do that as efficiently and as safely as multifamily real estate.
Great answer, Dr. Oni. We do have a couple of questions. The first one is, with the current market, I've seen several GPs pause distributions and do capital calls. Has XSITE had to do that? And if not, how did you get in this? And if not, how did you get in this situation? You want to take that, Dr. Oni? You want me to take it?
I would take it, and then I would let you kind of like add a little more to it. So no. The full answer is, the short answer is no, we have not had to do capital calls, which is fantastic. But that's a testament to the conservative underwriting that XSITE is known for in the industry. Even people who have been doing this for twice as long as we have been doing it for 10, 15 years, they review our underwriting and they tell us all the time that, man, you guys are conservative. but that's because we understand the risk we're taking here. We realize that we are three minority brothers who are decided to go on this journey to bring other people in our healthcare world and in our underserved world into multifamily real estate. We understand the fundamental risk of losing the trust of our dear investors if we do not stay super conservative with our underwriting. So our first goal is capital preservation. We want to make sure we are not losing any of our investors' money because we know from experience how hard each one of them worked, in their respective jobs to get that money. So I wouldn't want anyone to play with my money. So because of that, we pay a lot of detailed attention to checking, double checking, stress testing a lot of our assumptions and underwriting to make sure that we are able to implement our business plan. And you have to realize we started this company right in the thick of COVID. So we have just learned to stay conservative. A lot of the GPs that are now doing capital calls, essentially, they experience all the good times, and the good times got too sweet, and they almost forgot how to really double down and implement like a safe business plan. They just felt a little more relaxed that, you know what, if you buy a good property, everything is just gonna work out. Well, guess what? When the tide recedes, that's when you start to see who is swimming naked. Is that how they say it? Yeah. So the tide definitely receded. That's essentially what happened recently, and thankfully, XSITE Capital is not just swimming and fully clothed. We swimming in our scuba suit, and we we are thriving and still able to provide significant cash flow to our investors even in this time. And Leslie, feel free to add to that.
Yeah, I think you closed it up perfectly, Chairman. So we haven't had to do any capital calls primarily because one of the reasons because we follow the three fundamentals, the three immutable laws of real estate, which is buy with long-term debt, buy for cash flow, and always have cash reserves. So far, our deals have been doing well. We've been able to still pay distributions, although in some deals a little lower than what we anticipated, and we plan to keep it that way. So again, these are interesting times, so we'll keep swimming with our scubas on. And the other one was from Kevin Gaines. What controls are in place to prevent the GP from misappropriating the property?
That's a great question. So the controls that prevent the GP from doing it is because guess what? XSITE is not the only GP group. Every single time we go into these properties, we go alongside other folks. Some of them are on the team for specific reasons. It may be because they are great asset managers. It may be because they are bringing some great balance sheet to the deal. It may be because they have some unique, skill set that is going to make that business plan successful. But guess what the ultimate protection is the banks. The Fannie Mae or Freddie Mac or the servicer is not going to just let you underwrite crazily and still give you money for that. That's not going to happen. So besides us underwriting the deals, besides the bank underwriting the deals, we use third-party underwriters to double check our assumptions. We are talking to mentors to make sure that we are not making too aggressive. We're talking to the property managers who are in that particular market. We doing all this due diligence to make sure that we are safeguarding the hard-earned investments of our property or ownership groups. And so, and ultimately, when it comes down to it, we are people of integrity. At XSITE Capital, we follow 5 main core values. One of them, and the lead one, is that we are people of honesty and integrity. We also have the second one is that we have the spirit of abundance. We believe that there's more than enough out here for all of us to do very well. So we do not necessarily, we don't get kicked. We don't try to say, oh, you know, we're going to prevent this information from getting out there so that we can benefit from it. No, we want as many XSITE capitals as could be created out there so that many more people can get to hear the gospel of multifamily real estate. The third is that we are people of humility. We come to all of this with a great sense of humility that we want to make sure that, you know, that we don't think that we know all of it. We consistently are trying to learn from everyone, and we're learning from people above us. We're learning from people coming behind us. We're learning from people who started around the same time as we are. The fourth is that we are tenacious people. We do not agree. We don't accept no as an answer. Even when everything looks rough, we just keep putting one foot in front of the other. And no one exemplifies that than our tenacious Tenny, who is just a bulldog and leads the charge in that. And finally, our final core value is that we are always daring to be unique. We're always thinking outside of the box. We're always saying, you know what's everybody else doing? And how can we do it slightly differently? How can we come at it from a slightly unique angle? How can we think outside of the box and start, you know, offering things to our investors that other folks tend to not give to their investors? How can we give to our communities, not even people who have invested with us, but anyone who is trying to learn from us? How can we provide even more value to them? So for us, those are our guiding lights and our guiding principle. And as far as we continue to, and we empower everybody in the company to call us out when we are not living up to those core values. We review them frequently. We constantly calling each other out on it. Like, listen, in this particular case, what should we do? What is our core value on this? How does that guide this particular decision? And that, I find, has helped us to be great stewards of our investors' capital.
Yeah, and Kevin, just to add to what Dr. Oni said, we believe in checks and balances. Our systems are created and put checks and balances in place that we not only check in the property, we also check in ourselves. For every deal that we go into, we do have partners that Dr. Oni mentioned. For any funds that we keep for investors, we're not the only ones that have visibility to it. So that and our investors have full transparency and access to how their assets are performing, because for these assets, it's also important for us that we educate members of the community how these assets perform, how they work, because the key here is not just about creating wealth, but passing knowledge that you could take and pass down to your next generation as well. Next question is from Bishrat. Thank you for the great presentation. Question. I'm a passive investor with no otherwise experience in real estate, interested in becoming a GP. What key skills do you advise me to develop to become a good general partner?
Well, Leslie, you want to take that? I'm happy to take it. But
go ahead, Chairman.
Okay, great. Well, to be a good general partner, one is you have to bring something unique also to the table, right? So one of the first things that I would do is just to start learning the different aspects of the business. Are you a great underwriter? Are you just a great person at, like, you know, asset management? Are you able to pay so much attention to details that you're able to pick out things that other folks may miss? Are you just an amazing organizer to the point where you're able to help orchestrate the meetings of the GP group, the the flow of it? You know, are you a phenomenal capital raiser? You know, are you just able to go out there, talk to your group of investors and raise capital prolifically from them? You have to kind of bring a unique you have to have a value proposition when it comes to being a great GP. So those will be my advice for you. And then if you feel like you're just doing it by yourself and you don't have all of these skills, then you may also want to start to look for partners who have complementary skills to you. Like at XSITE Capital, I consider Tenny, Leslie, and I the three legs of a tripod. And we have completely complementary skills. And the things that one does well, the others may lack in. But as a unit, we are relatively complete. So that's what I would encourage you to start looking at folks that share your core values, that are like-minded, that are just as ambitious, that are just as honest and full of integrity, and maybe start to partner with them. And then certainly we are more than happy to talk to you more, and any one of us, about potential ways to make that happen for you, because we have created that opportunity for a ton of folks who have participated in many of our deals. Tenny?
And then to add to what Chairman just said, we have a resources that we can share with you that kind of outline some of the things Dr. Oni just mentioned. So drop your email and I will make sure we send that across to you so that you can see some of the things that are some of the roles and responsibilities of a GP. And then we can have further conversation like you mentioned as well.
Yep. Any other questions? I think we have about 10 more minutes. Fantastic. It seems like I exhausted your questions, which is a good thing. I
have a question.
Go ahead.
How are your crypto investments doing?
Actually, believe it or not, I have not checked. I still, up until this day, still dollar cost average Bitcoin and Ethereum, and that's really the extent of my crypto investment. So I don't check it, I don't look at it. It just automatically happens like every week, I suppose.
Any other questions, guys, before we wrap it up?
Awesome. Well, is there anyone that wants to introduce themselves, introduce their company, introduce their work? There may be other folks in the group, in the room right now that would be good partners to you, or that may bring some value to you, or that you could also provide value to. So that's one of the purposes of this meetup, is for like-minded people to come together and exchange ideas, introduce each other to one another, and hopefully start to collaborate more. Anyone want to?
Hi, my name is Richie Capani. How are you?
Hey, Richie, how are you? How's it going?
Doing well. I got the message on LinkedIn for this Zoom, and I was super excited. I apologize for being late. Shared some great information. I took notes. And I work in commercial real estate currently. My team actually does syndications for multifamily. However, that's like a separate portion of our team. I do like leasing and listings and stuff like that. But I am super excited to learn as much as I can. So I'm happy to be a part of the community, and thank you so much for creating a space for us.
Thank you so much. I really appreciate it. It's always exciting to see other folks participating in this world, doing syndications, you know, buying other types of commercial real estate, participating in whatever way, maybe on the lender side or on the property management side or on the acquisition side. it's always great. I'm always learning something from everyone as we meet them. So thanks, Ruchi. Really appreciate you.
Thank you.
Anyone else? Clarence, I saw you came on video. You want to chat? You want to?
I wasn't gonna say anything, but call my name. Hey, I mean, once again, man. I mean, you guys have been a tremendous blessing in my entire life, man. Changed some things for me, and yeah. So I've been in commercial real estate since I met you folks, and multifamily syndications. I mean, it's a wonderful place to be in. I mean, right now I'm actually putting an offer in on a smaller deal right now, an 18 unit. So we'll kind of see where that flows. Hopefully the brokers pick me. But well, yeah, just having fun with it though. And
That is amazing.
And just loving to learn and how I can contribute to the community. Absolutely.
Absolutely. Yeah, that's beautiful. That's beautiful. That's amazing. Yeah. Any other person?
Hello,
Yeah.
how's it going?
Hey, Pedro, how are you?
I'm doing pretty good. How are you?
I'm wonderful, wonderful.
Yeah, well, my name is Pelu Ogunyemi. I'm out in Maryland. I'm a CRNA by trade.
Nice.
I've been doing it for quite a while now, and I also run a staffing company in the Maryland, DC, Virginia area. So if anybody's looking for, employment, locums employment, please seek me out. In addition to that, I'm very excited about, I feel like real estate is kind of like the final frontier for me. I've been looking at it for years. I've learned a lot about it. I've read a ton of books, but I don't say I have analysis paralysis. That's like the key term that everybody tries to use. But I feel like I do need a little bit of a handhold to get started. Are you guys willing to offer a hand for me to hold?
We're not just gonna offer a hand. We're willing to offer, whatever. If you need a hug to go through, if you need a, we are going to be there for you. On a more serious note, that's exactly what inspired us to create XSITE Capital in the first place, is to assist and provide value to folks like you so that you can also start investing actively or passively if you want to start that way, but also certainly if you want to get active with it, this is exactly what we do, and we are here for you. So if we don't have your contact information yet, please Miles, can you please drop your information in the chat, and we'll make sure, or Kayla, and we'll make sure to reach out to you, or if you drop your information, and we'll definitely reach out to you and get a sense of where you are and take it from there. Also, if you just want to text wealth to the number that Leslie just posted, that's another way that we could automatically get your information and get started with you.
Yeah, for sure. Thank you so much, Julius. I appreciate it.
Appreciate you, Bill. And congrats on being a successful businessman.
I appreciate it, man. I'm definitely blessed. God has definitely done a lot in my life. So
that's beautiful. It's awesome. I love when healthcare professionals or other professionals think outside of the box and do other things that expand their horizons. And I think Timmy Ajao wants to speak. Hey, Timmy.
Oh, hey, everyone. So yes, I'm a practicing emergency physician here in Houston, Texas.
Beautiful.
Yes, and I have been interested in real estate for a long time, like 2017, just like someone just said. I've been really having analysis paralysis, but I finally actually closed on my first deal today. So I'm pretty excited. Yeah, so it's going to be, hopefully the goal, the exit strategy is to be a short-term or mid-term rental. But I have been looking into this multifamily passive investing as well, because, kind of like you said, I don't know if I want to trade one burnout for another, running up and down.
Absolutely.
Yeah.
But
So I'm in the
sometimes
process. Huh?
go ahead. But I said sometimes you just gotta get your hands wet, with
Yeah,
something.
you just got to get your hands wet a little bit. So I'm like, yeah, let me just start this with this one. But yeah, I'm looking to I've kind of been like, lurking with you guys as well as some other operators. So I'm just trying to see how I can learn more and understand all the terminology. So thank you guys for your webinars.
Thank you so much. Really appreciate you. Thank you so much for those kind words, and congratulations once again for that acquisition. That's amazing. That's beautiful.
Oh yeah, and then Kim and I went to medical school together, by the way. So
Oh, that's
yeah.
And Kim is super special to us. I don't know if you noticed it, but I listed our company as part of the general partners group. In my presentation. That's because she's a power of she's the force of nature, and she's she's already well on her way, and I'm just super excited to see where she takes it for sure.
Yeah, awesome. Thank you.
Thank you. Yeah, Dr. Incam, I see you came on camera. Let's hear from you, and let's know what you've been doing. What are you achieving nowadays? I know you're doing some incredible things.
What have I? So the most. Hi everyone. My name is Nkem. I am first and foremost. I'm grateful for these guys and for XSITE Capital. Like everyone says, they have literally held my hand and my elbow and my shoulder and everything, and has walked me through this journey. And I am I'm currently a co-general partner on my first deal. And so I'm really excited about that. And we're about to close on that. So that's like a big thing that I'm really excited about. And it's really thanks to you guys. And I know this is just the beginning of something amazing. And I'm here for it. So.
Absolutely. Thank you so much. Thank you so much for those kind words. But yeah, we just the vessel. You definitely did all of the work. Yeah, no questions about it. Yeah, but it's so cool to see what you're doing. In many ways, you also inspire us, because sometimes when you've been doing it for a little bit of time, you start to get a little comfortable, and then when we see the fire that you bring, I know personally I'm inspired. So thank you for that. Yeah. Excellent.
Hello everybody.
Yeah, Tita, how are you?
I'm doing well. How you doing?
Not bad at all. Not bad at all. You have the last word, my man.
Tita, is that you?
Yeah, this is Tita speaking. Hi, fellow. How you doing, boss?
Boss man, how are you, man?
I'm doing well, God. Thank you. So my name is Tita. I'm a CRN here in Maryland. Fellow is actually my boss. I do some work with him. And I got invited here by Leslie Awaso. And I want to start by thanking you all for the wonderful information you're putting out there. A lot of people are interested in real estate, but they don't know how to go about it. And listening to this webinar is kind of eye-opening. And of course, Leslie it's like a mentor to me. He's my mentor, and he's been giving me books to read and telling me stuff that I have to Google for hours to understand online. So it's a journey, a very high one for me, and I look forward to learning more and growing. Now, the question I have is, if somebody needed services that XSITE Capital already has, would you be willing to provide those services to help somebody, an individual or another corporation, say on the writing or negotiation contract or evaluation of assessment of a building and stuff like that? Would you be willing to do that? Thank you.
Leslie, you want to take this? Because we've done it too many times, but I'll let Leslie take it since it's the.
Absolutely. We provide a ton of education to other people, and we bring in, like Dr. Oni mentioned earlier in the conversation, we work with other partners to acquire deals. For example, we always have our platform open to new syndicators, people that are starting off in their journey, that want to get that experience and learn and go through the whole process. So coming in and being part of that of a deal is a great way to learn and leverage at least the experience or the expertise or the knowledge that we have to be able to learn along the way as well. I'm not sure if I'm answering all the question. Chairman, did I miss a part there?
So I mean, if you just need some guidance with some particular deal or something like that, you know, we are a collective, and so feel free to reach out, and we'll just connect and we'll talk, and maybe we can provide some value to you. So I don't know the details of what you're asking, but I sense that you may need some guidance with some certain things or some help with certain things. Specific
on the writing, we have Tuesdays on the writing class that we do here at XSITE Capital.
Absolutely.
That we invite our communities to come on. So if you have a deal, I will encourage you to participate in that on the writing class. And that could be one of the deals you use as an example, or have a conversation about that on the writing class. That's one way we give back as well. And also we've not been taking students. We've been able to take one mentee so far. And a lot of people have been reaching out to us, and we might have to have a conversation about bringing in students at some point. But all of these are just ways that we add value to people.
Yeah, absolutely. And I just let the time get away from me. I'm so sorry, people. I hate to take people's time when I don't have a right to it. It's already 7:34. This was supposed to end at 7:30, so we're 4 minutes over. My apologies. We do not take for granted the fact that you're here with us. You could be anywhere else in the world, but you're here with us tonight. We really, truly appreciate you. We look forward to seeing you again next month, same time, first Monday night of the month. We'll be here, and we'll be ready to share with you, fellowship with you. Learn from you, teach you, and whoever is presenting will be bringing some heat as usual. So thank you, everyone. Have a fantastic rest of your week. God bless.
Thank you all for your question. Take care.